Let's bring in Kevin Green, senior markets correspondent, to help set up the action today. So we got a big week in front of us because we've got Nvidia, we've got, still some retail earnings as well. Plus, we will finally get a data dump this week. Talk to me about your expectations for the week ahead and what you see as moving markets.
Well, Diane, yeah, obviously we do have a lot that's on the calendar this week, especially when you're looking at Nvidia earnings on Wednesday. That's going to be a telltale sign there. Now, obviously, when you're looking at the performance of Nvidia when it leads up to earnings as well as after earnings, we don't see that big of a market maker move, if you will, or actual realized volatility actually hitting the market here. When it comes to Nvidia, let's see if this time it's going to be a little bit different. The market is pricing in around a 7% move either to the upside or downside. But once again, this has been a premium sellers type of play here when you're looking at the earnings announcement. And then we also have the economic data on Thursday. We are going to get the jobs report. We might get some other economic data this week as well. As that kind of trickles in, we'll get a better sense of how the economy is really holding up and if the Fed is going to pick a direction here as to cutting rates in December or holding off for now. We know that it has been a little bit split. At least 4 members last week kind of signaled that they want to be able to hold at least for now. And this might be one of the bigger dissents that we see in the December meeting. So overall, what we have seen is a little bit of volatility, a little bit of gyration. We did close the week higher when you're looking at the higher than the 50-day moving average on Friday. That has been bullish. Mondays have been bullish for the market. Let's see if we're going to have some follow through there. And I think you're also probably going to start hearing about the China trade deals kind of creeping back into the market. Scott Besson over the weekend kind of talked about the fact that they're still kind of ironing out this rare earths deal, and maybe we have a deal actually signed by Thanksgiving. Look at those rare earth metal stocks as well. Those could actually catch a little bit of a boost if we are seeing China still holding back on some of those supplies coming into the United States.
Does Nvidia have the potential to set the tone for the rest of the year?
I'm not sure if it does. At the end of the day, the stock has once again gained the largest market cap weighting in the S&P 500. We have seen a lot less volatile moves when it comes to Nvidia just as a whole. And we have to be mindful, too. The data center business, even though it is thriving, actually did miss the street's expectations the last time around. Now, I'm not sure if that's because of a supply chain issue or if there was just heightened expectations coming into this report. But I think they're probably going to signal, obviously, that demand is strong. I think the big wild card is going to be the Blackwell sales. Are we starting to see that production actually hitting the market, and are they ramping that up fairly aggressively here, and where is that demand coming from? We know the hyperscalers in-house here in the United States are definitely buying up a lot of these chips, but are you starting to see some sovereign demand overseas, which has probably been discounted when you're looking at the stock, but that might be something that they have to weigh on a little bit more as China sales continue to be a little bit finicky because of the policies between the United States and China. So I'm not sure if Nvidia is going to be the thing that really makes, let's say a Meta or a Google Alphabet really rally to the upside. In fact, if they come out with a very aggressive guide to the upside here, maybe that's a signal that CapEx spend is going to continue to ramp up. And some of these names have not performed well as they signaled that they're going to continue to increase spending when it comes to these data centers. Obviously, Meta being the big headliner there for that. So I'm not sure if we're going to see a major market impact. We talk about it every quarter, right? We lead up to it every quarter, Diane, and then after the fact, it's kind of like, all right, what's the next thing? And I think that's probably going to be the same this time around.
That's a good point. All right, let's talk about another member of the Mag 7. Alphabet Google is catching a bid this morning off the news that Berkshire Hathaway took a stake. And you think about the context I think about is you recall over the years, Warren Buffett's been notoriously reticent when it comes to the tech sector. Take me through some of your takeaways here.
Yeah, but Warren Buffett also stated that he wishes that he could have invested in Google Alphabet a lot earlier as well. So it looks like he is making a little bit of a stake here, buying around $4.9 billion worth of shares. That averages out to around 17.85 million shares for Alphabet Google here. And this is at a time where we are going to see Warren Buffett kind of take a back seat when it comes to the market. Now, their cash reserves continues to pile up. They did sell additional shares of Apple, which is still their largest holding. They continue to cut Bank of America as well. But this might be a very small positioning for a company that has a very diversified portfolio. We look at the ad spend business, which is driving the majority of their profits right now, but they also have the cloud business that continues to ramp up, continues to really kind of outperform some of their peers. And then you're looking at maybe just even a small slice of their business being in that quantum space. If that does become something over the next 5 to 10 years, this could be a name that does actually benefit. So Google Alphabet has been doing a phenomenal job from a price action reaction standpoint, even though we have seen this drawdown or this volatility in the broader equity market, Google Alphabet has been able to hold up. So an interesting stake, not a large one. I mean, it sounds like a lot. $4.93 billion is a lot of money to me. But when you're looking at Berkshire, it is a very small slice that they're getting into the space, maybe nibbling because of the valuations are still cheaper than some of their peers when you're looking at the Mag 7, cheaper than Nvidia, cheaper than Microsoft at the moment.
I love that you gave the caveat there, KG, because yes, to most people that's a lot, but maybe not to Buffett. Let's talk a little bit about some of the pressure we're seeing off of a downgrade happening in the memory space. I'm seeing pressure on Dell, HPE, Morgan Stanley out with a downgrade here. What are the details?
Yeah, this is an interesting note. We obviously have seen the memory names moving aggressively higher over the last month and a half or so. You have the Microns, Western Digital, SanDisk moving a lot higher here as we are starting to see demand when it comes to memory within the data center space really ramp up. And they are actually stating that the memory supercycle may be creating potential downside earnings risk for the hardware manufacturers in 2026. They believe that rising memory costs and input costs, plus a weak non-AI hardware demand could actually lead to lower gross margins for a lot of these businesses, which could create a little bit of negative revisions when it comes to their outlooks moving forward here. So kind of an interesting note, once again, acknowledging the fact that the memory demand in the AI space is very strong, but they also believe that that's going to actually eat into maybe some of the margins from weaker space when you're looking at some of the cyclicality or the industrials or even the automotive space when you're looking at memory, which is still challenged. We are still seeing a glut in that space, and a lot of these stocks have run up pretty aggressively here. So let's see how they kind of hold up. Maybe this is kind of that next trade within the AI cycle, if you will, and let's see if it's going to be able to maintain as such here. It is a very commoditized business when you're looking at memory. A lot of competitors in this space. Prices generally do tend to move down when you're looking at the products that they offer. Margins also become a little bit squeezed, but it seems like for now, traders and investors are really enthusiastic, but Morgan Stanley might be getting ahead of the curve here and saying, look, 2026, it might be a little bit of a different story.
Underway on Dell, that stock down more than 6%. HPQ underway as well, down 4%. HPE just under less pressure than the two, down by about 2%. Or 3% now. All right, let's talk about the levels that you're looking for on the S&P 500 to the upside and downside. And I'm interested to know what could potentially get us there to the upside, given the context that Mondays have been higher for several weeks. I think it's going on like 10 weeks now.
Yeah, to the upside, 6,800. If we are able to break through that level, 6,820, that's really kind of where that line is setting at right now. When you're looking at the volume flows, the 6,800 seems like a reasonable level based on the previous resistance levels that we've seen, especially last week. To the downside, 6,660. So a wide range. We are still seeing volatility ramp up a little bit higher. We're sitting at around, 20.6, a little bit higher than that when you're looking at volatility. So we're implying around a 1.3% move, either to the upside or downside. Volatility is moving up as well as equities moving up. That's one thing that we kind of always talk about here, and that usually leads to a break in one or the other, either equities moving lower or volatility moving lower here. Unfortunately, if you're looking at the tech names, maybe post earnings, Nvidia does create a little bit of gyration in the market. Maybe you do see communication services catching a little bit of a bid, especially Meta, which has been drawn down pretty aggressively. But Diane, I would say keep your eye out on consumer staples, especially those grocery names. We are seeing tariffs being rolled back on some grocery items, coffee, beef, things of that nature. Over time, that could expand their margin in Q1 and Q2. Underloved sector, very underweight when you're looking at the S&P 500. But if the defensive trade's going to hold on here, the staples actually do have a fundamental reason to move higher.
All right. Thank you, KG. That is Kevin Green, Senior Markets Correspondent, with a look across what targets you should be looking for to the up and downside of the S&P 500 and beyond.